Foreign investors have poured $925 million into Egypt since Wednesday, setting a record high for the country and signaling growing confidence in its economy. The investments will go towards infrastructure projects and industrial development, helping to create jobs and boost economic growth. According to government officials, the influx of foreign investment is a clear indication that the world recognizes the potential of Egypt's economy despite its currency sharply depreciating. Now, the Egyptian pound lost value to about 32 to the dollar from 27.60 at the opening on Wednesday before rebounding to 29.61 pounds by the end of Monday. Now, the government has promised to continue to tinker with policies that will further woo foreign investors and attract FDIs into the country to improve its import and export trade vis-a-vis the economy, though the country's legal tender is said to be losing value and is posing existential threat till date. And that is why we have Professor Ayaz Ahmed Shafi, an African Affairs Analyst and Associate Professor, Unitedworld School of Business, Kolkata in India, joining us to unpack this latest development. Thank you so much, Professor, for joining us.
Pleasure.
Now, before foreign interventions, now how has the Egyptian pounds and Forex, how have these two variables performed on the floor of the exchange?
So when you look at the performance, I say it's been fluctuating, like you can see from the records anyway. But one key takeaway when you start looking at the trends, you would notice that the spike has stabilized. So over the last 1 week, I mean, there was a certain spurt when it went down to 32 to a dollar kind of thing. And now we are stabilizing at about 0.9. But that's not my key concern. If you're literally looking at investments, I hope we are connected still. Right. So what we're talking about is when you're looking at the Egyptian pound stabilizing at this kind of rate, that's just one of the factors. But you look at go a little deeper and look at what exactly is the implication of this depreciation of the pound. Now, what it would mean is that the imports would become expensive, and that has an implication for the local domestic manufacturers. Now, when you have domestic manufacturers who find it more attractive to produce goods and services which could be in terms of pricing comparable with what can be imported, FDI comes in. People would want to invest in set up industries and businesses that could be catering to the domestic market, and that works. So that's one of the key things. I mean, in my mind, over a period of time, this would have a lot of dividend rather than impacting negatively. Of course, in the initial phase, in the initial stages, there'll be a little bit of a hardship, but when you really look at it, this becomes a lot more attractive. And you couple, sorry,
no,
please.
Go ahead.
So you couple that with some of the policy decisions that have been at play here as well. You know, the interbank exchange of dollars, right? Allowing the dollars, banks to transact on their own without any reference to the central bank. Now that makes it a lot more attractive. The norms of setting up businesses in Egypt, for example, right? They're allowed to take money out of Egypt more comfortably than in the past. All this is adding up. And then you have the other projects which are focused upon the development areas and so on. So that's the way I'm looking at it, actually.
So invariably, the policies that Egypt has put forward over the years is what is attracting foreign investors to come into the country and invest their assets into the country's economy. Now, over $925 million is what the foreign investors have brought into Egypt's Forex. What do you think these investors are hoping to achieve? What are they looking out for and hoping to benefit in terms of the investments they are bringing into Egypt's economic ecosystem?
So, you know, this first is to understand that this relative political stability, I'm using the word relative very, very cautiously, because there is relative political stability at this point in time in Egypt. So that itself is a reassuring factor. But beyond that, if you look a little beyond that, you look at the focus on infrastructure, particularly in terms of road, developing road and connecting cities. Then there's this idea of land reclamation for, the target is to get about 20% arable land reclaimed. That's the idea, which means that there would be a growing domestic market, which will have, what is the implication? You're producing a lot more agricultural products than you did in the past, and agriculture does still contribute a whole lot to the GDP of Egypt, actually. Right. And that being so, a substantial number of people are also employed in the same sector. That means the more land you have, there's more opportunity for employment in agriculture that enhances the buying capacity. Look at the growing population of Egypt, actually. And that population, if it has a purchasing power, it does become a very, very attractive destination. I'm looking at the India story some 30 years ago, similar kind of situation. I'm not comparing the two economies, they're very, very different in a whole lot of ways. But if you look at the population itself, that makes it very attractive. But you also look at these special zones that are being created, particularly the Suez Canal economic zone that they're talking about. And they're talking about one-stop shop, all kind of needs of investors in there, no major restrictions when it comes to licensing issues and so on, right? And we all know that the Suez Canal connects the East and West. China has invested a whole lot in that region, actually. So when you look at and this is not yesterday. I mean, while we are talking about the price of dollar fluctuating in the last week, 10 days, 15 days, but this has been over a period of time, the last few years, actually. When you look at these developments, you understand that the government is clearly focused on making sure that there's enough comfort in the minds of the foreign investors, right? They're allowed to bring in expats up to about 20%, if I remember my data correctly, right? You can remit your amount more comfortably than you did in the past. You can take the profits out a lot more easily than you did in the past. Then seizure of properties and assets is, it's declared that they're not going to get into that, actually, no matter what. All this makes it a very, very attractive destination, right? So when you look at the holistic picture, when you put things together, connect the dots, as they say, the trouble is we often enough miss out on some key elements when you are trying to read into these kind of data. So my sense would be that maybe it's not a bad thing, actually, if you are looking at the price of Egyptian pound, rather, sorry, dropping against the dollar. And that has its own merit. Perhaps leaving it up at floating prices is the key, actually, because that also makes it immensely attractive to the investors, actually. So the floating prices for the Egyptian pound itself makes it very, very attractive. That's how I see the whole story.
Okay.
Sorry.
All right. Well, let's talk about this foreign direct investments. Now, let's compare to what Egypt used to have before now. How would you describe those investments some 10 years ago as compared to now? Would you say that Egypt has made appreciable progress in terms of the kind of, or the quantity and quality of investments coming into the country, despite the currency fluctuating and not having a stable value, as it were?
Right. So if you look at the graph over not just 10 years, but over a period of time, there have been a few spikes. So in about 2000, between 2003 and 6 kind of time, I mean that kind of time period, the major spike happening. But after that, the graph seemed to have flattened, except for something in 2012, 13 kind of time. And then again it flattened or tapered off, right? Now it seems to be picking up. The sense is that one of the things that is happening, and you see all these social, political, and economic issues are interconnected. The fact that one of the things with IMF is that the army interference is going to get reduced in economic affairs. So interference of the army is gone down substantially in economic affairs. And that's a major one, actually. Because we know how it plays out when army has a say in anything, not just the economy, actually. Now, that itself works as a reassuring factor for the investors, because they know, like I said earlier also, the seizure of asset and stuff like that is kind of addressed. So right now, the trend is on the up. Egypt has always been an attractive destination for investors. But you look at who are the major investors at this point in time, and you will find that Saudi Arabia and UAE are, apart from US and UK, they contribute between these three groups, I would say. They contribute about 90% of the investment. I don't have the current data, what exactly it is right now, but traditionally they have. And if you notice, Saudi Arabia has gone big in going out and investing in different parts of the world. They have invested in India as well. So when you look at that under Rahman, the MBE, so he has kind of enhanced this thing about Saudi involvement in various areas. I take it that Egypt being one of those locations which has traditionally a lot of connect with the Arab world, has resources which the Arab world can connect with and has expertise in oil and gas, for example, right? Other minerals as well. They would want to invest in those spaces. So I can see even in going forward, I can see a lot more investment coming in. The other factor would also be that some of the other destinations which were considered attractive some time ago, Brazil, for example, South Africa, India, they are not attracting the kind of investment that they did in the past. They have ceased to be as attractive as in the past.
Okay.
Therefore, the money has to go somewhere else. I mean, if I'm an investor, I would look for another destination. And you would find that China has gone quite big when it comes to Egypt, actually. So apart from the three clusters that I've talked about, you will notice that China is also investing quite substantially in that market as of now.
Okay, Professor. Finally, before I let you go, I'd like to know what critical sectors of Egyptian economy would you expect the government to play up to attract more foreign direct investments? Because you're saying that there's a whole lot of positives coming for the country. But then, of course, right, if you're able to look at those critical sectors, you might just have an accelerated growth. So what critical areas, within a minute or two, I'd like you to point that out.
So you have traditional areas anyway, tourism being one of those, oil, gas being another one of those. But in my mind, if the government is to make it really big, I noticed that they're looking at renewable energy, right? Generation of renewable energy, and they have enough, I think, for solar energy and wind energy and sea energy kind of thing. That could be one focus area. The other is infrastructure development. Construction is one area which is attracting quite a bit of investment, actually. But in my mind, I think it is going to be focused more on renewable energy area, and the other one would be agriculture and infrastructure put together.
Okay.
Because if they're going big on land reclamation, then agriculture does have to become one of those critical areas that need attention.
All right, thank you so much, Professor. Let's see how well Egypt will be able to galvanize and, of course, improve on these areas, because what is important is to have enough revenues, have enough job employment, have enough economic benefits, most especially for the people, even as these investments come into their shores. It's quite nice, very beautiful having you join us to discuss with us.
Absolute pleasure. Thank you.